Bitcoin takes 10 minutes for a single confirmation. 10 minutes in a world where you can send messages, pictures, or even money in seconds. But imagine there's a cryptocurrency that's just as secure as Bitcoin, but confirms transactions in under 10 seconds. No proof of stake, no compromise on security. That's exactly what Kaspa promises. And in this video, I'll show you why this altcoin could beat Bitcoin where it hurts the most. Hi, I'm Marius from 10x Invest, and on my channel I analyze stocks and cryptocurrencies using over 20 data-driven metrics. You can find the complete explainer video up here or ultimately down in the video description. Today, let's take a look at Kaspa, an altcoin that flies under the radar for most people, but technically is one of the most exciting projects in the entire crypto market. So grab yourself a relaxing coffee, leave a like for me, and then let's get started right away. By the way, you can find my complete portfolio, including all my analyses of low caps, but also ultimately penny stocks in the 10x Elite, the complete program for you. Take a look at everything, it's extremely exciting. You'll find all the information in the video description. But now, straight to the most important question of all. What actually is it? Kaspa is a cryptocurrency that was launched in November 2021. And in the end, just like Bitcoin, it uses the proof of work process. So that means miners secure the network through computing power. So it's the same principle as with Bitcoin, which has been using this for 15 years already. But here comes the crucial difference. Bitcoin can only ever process one block after another. So it's like driving on a one-lane road. No matter how many cars come, only one can get through at a time. But Kaspa has fundamentally solved this problem. Instead of a blockchain, Kaspa uses what's called a block DAG. And you can imagine that like a multi-lane highway. So multiple blocks are processed simultaneously without compromising security. The result? On average, Bitcoin takes 10 minutes, as mentioned, for a confirmation. Kaspa does it in under 10 seconds, and the network currently processes 10 blocks per second. The goal is even 100 blocks per second. And all of this without proof of stake, so without a central company controlling the network. Kaspa is completely decentralized, entirely open source, and is run entirely by the community. But what really makes Kaspa special is its origin story. There was no presale, no coin that was distributed to investors beforehand, no bonuses, or anything else. Every single Kaspa coin was ultimately mined through mining, just like it was with Bitcoin. And the whole thing was developed by Dr. Jonathan Suplensky, a researcher from Harvard, whose work was even cited in the Ethereum white paper. With the so-called Ghost DAG protocol, he created the technical foundation for Kaspa. And now it gets really interesting. A major update is scheduled for May 2026. Kaspa will get smart contracts, meaning the ability to run programs directly on the blockchain. This is exactly the feature that made Ethereum so big, except that Kaspa is built on a much faster infrastructure. But what does it really look like when you analyze Kaspa based on the hard facts? For example, what about market capitalization, trading volume, and the competition? That's exactly what we'll take a look at now in the full analysis. And you can expect a few surprises. Let's start right away with key figure number 1. Market capitalization. Kaspa currently has a market capitalization of around $1 billion. That might sound like a lot in the crypto market, but in the end it's only a mid-cap. For comparison, Bitcoin is at 1 trillion, Ethereum at several hundred billion. Kaspa is currently ranked around 55 to 66 on CoinMarketCap. And the most interesting thing about it is its all-time high, at around $5 billion US. That means Kaspa is currently almost 85% below its peak. For investors, this of course means there's still plenty of room to grow if the project delivers on its promises. A mid-cap can grow much more strongly in a bull market than a project that's already in the top 10. But the question now is how many coins are actually still in circulation? And how big is the risk for the investment? Due to new coins, that it gets diluted. The circulating supply. And this is exactly where it gets really interesting. Out of the maximum 28.7 billion Kaspa, 27.3 billion are already on the market, 95%. By July 2026, even 95% will have been mined. B. That means hardly any new coins will come onto the market. In other words, the risk of dilution is extremely low, compared to other altcoins which ultimately only have 30 or 40% on the market so far. With Kaspa, that's practically no longer an issue. Fewer new coins also means less selling pressure from miners. and that's positive for the price in the long term. But what about the future of the project? Is there a clear plan for that? The roadmap for Kaspas is ambitious and is documented quite precisely. Major milestones are just around the corner. On May 5th, for example, the latest major hard fork update will be released. As mentioned, the update will bring smart contracts, native tokens, and the so-called covenants to the Kaspa blockchain. This is a huge step for Kaspa, transforming it from a pure payment chain back into a fully fledged platform for decentralized applications. In addition, work is being done on the DECKnight protocol, a further development of the previous consensus mechanism, for faster confirmation times. And then there's the ZK bridge, a technology that enables Kaspa to connect with other blockchains. But to be honest, it must also be said that the smart contract launch was originally planned for August 2025, but has been postponed. The team justified this with various security tests. Whether this was a smart move or more of a warning sign is something everyone has to judge for themselves. But what personally convinced me is the team behind it. And that's exactly what we're going to look at now. The team. Kaspa was founded by Dr. Jonathan Simplonsky. He is a postdoctoral researcher at Harvard University and conducts research in the field of RMEV, that is, minor external value. In his work from 2003, he worked on the Ghostek protocol, which was directly cited in the Ethereum white paper. Alongside him, Michael Salton and Shai Werborski are also part of the core team, both with strong academic backgrounds. Background in the field of cryptography. Another developer brings 30 years of experience in system architecture and co-founded the Scaling Bitcoin competition. This is not a marketing team, but rather a real research team behind it. And you can tell by the way they have built the project. By the way, I do daily chart analysis of projects like Kaspa, etc. I do that on X. You can find the link in the video description. But now to the next question. Does Kaspa actually fit the current market trend? The narrative? The narrative of Kaspa is clear and simple. It's what Bitcoin would be if it were reinvented today. Proof of work, but of course decentralized, launched fairly, but with a more modern speed. At a time when more and more projects are switching to proof of stake, Kaspa is deliberately going against the grain. And against the current? And that's exactly what makes it so interesting, of course. Because there is a growing group of investors and miners who are convinced that proof of work is the most secure solution in the long run. And Kaspa naturally appeals precisely to this target group. At the same time, the DeFi narrative is also being addressed with the smart contract updates. That's a rare combination. Proof of work security with smart contract functionality. But a strong narrative alone is not enough for a project. It also has to solve real problems. Problem and solution. And this brings us to the core of Kaspa. The problem being solved is as old as Bitcoin itself. Bitcoin can only process and confirm a very limited number of transactions per second. As mentioned, they usually take about 10 minutes on average. Many other blockchains have ultimately tried to solve the problem through proof of stake. But in doing so, decentralization is often lost. That's a bit of the problem. However, Kaspa takes a completely different approach. With the so-called Ghost DAG protocol, blocks are not processed one after another, but in parallel. Currently, the network handles 10 blocks per second with a confirmation time of under 10 seconds. And in doing so, the network remains fully decentralized and secured by proof of work. This is not a minor improvement, but rather a fundamentally new approach. But what about energy consumption? Especially with proof of work, of course. Sustainability and energy efficiency. Yes, Kaspa uses proof of work and therefore naturally consumes energy. There's no sugarcoating that, but there are some important details. Kaspa uses the so-called car-heavy hash algorithm, which was specifically developed to be compatible with so-called photonic miners. This is hardware that works with light instead of conventional chips, making it significantly more energy efficient. Additionally, a full Kaspa node can run on any regular PC. That is anything but a given in the proof of work space. Compared to Bitcoin, the energy consumption is significantly lower, but compared to proof of stake blockchains, Kaspa is of course still much more energy intensive. Now, of course, the question arises, who is actually putting their money into this project? Who are the investors? The investors and the capital. The creation of Kaspa began with Doug Lepson's research firm, which was funded by Polychain Capital. Polychain is one of the most well-known crypto funds worldwide, but this is important because DAG Labs was dissolved before Kaspa was launched. So there were no tokens distributed to investors. No venture capital received Kaspa before its launch. Today, development is funded by a community dev fund. This is a multi-signature wallet managed by 4 elected community members. At least 2 of them must approve every expenditure first. And of course, this is extremely transparent, but it also means that Kaspa doesn't have the same financial resources as other projects that have raised hundreds of millions from VCs. And that brings us directly to the competition. Kaspa's direct competitors are divided into 2 groups. As mentioned, on the one hand, there's the proof-of-work sector, which includes Bitcoin and also Litecoin, but of course there are also smart contracts where it's more like Ethereum or Avalanche, for example. But none of these projects do exactly what Kaspa does. Kaspa is the only major cryptocurrency that is based on this block DAG structure and simultaneously uses proof-of-work. There simply isn't another project that achieves 10 blocks per second with proof-of-work security. The downside is that Kaspa's ecosystem is still significantly smaller than that of Ethereum or Solana. There are thousands of applications there, whereas with Kaspa, it's still absolutely at the beginning. But the My upgrade will be crucial here. But even the best project needs visibility. So what does that actually look like now? Marketing. Kaspa doesn't have a traditional marketing budget or a company behind it pouring millions into advertising. Instead, everything ultimately runs through the community. And the community has brought everything to around 500,000 followers on Twitter, for example, or on Telegram. And on top of that, there are about 55,000 members on Discord. There's an active ambassador program, including events in Berlin, Dubai, and Korea. And in August 2025, Kaspa was listed on Swissborg, one of the platforms with 1 million users. You know, Swissborg, my channel partner. By the way, if you want to get cryptocurrency yourself on Swissborg, you can now even get up to 50 euros. Bitcoin bonus. You can find all the information in the pinned comment. If there are more listings coming up, especially on bigger exchanges, that would of course be extremely important. And that is definitely what could of course also make the price skyrocket. But now a simple question. How easy is Kaspa actually to understand? The simplicity of the idea. That's a point that is often underestimated. A project can be technically brilliant, but if no one understands what it actually does, it's hard to attract capital. With Kaspa, the core message is relatively simple. It's a faster version of Bitcoin, yet just as secure and decentralized. Everyone really understands that sentence. The technical details behind it, like GhostDeck or BlockDE, are indeed more complex, but for users, for the end user, it simply means faster transactions. That's comparable to Litecoin, digital silver, or gold. In other words, Bitcoin as digital gold. Kaspa does something similar, just with significantly more efficient technology. But what is Kaspa's long-term vision? The long-term vision. Kaspa's vision is extremely ambitious. The project aims to become the global settlement layer, meaning to combine proof-of-work security with the speed of the internet. And the long-term goal is 100 blocks per second. On top of that, there will be smart contracts, ZK rollups, and a built-in Oracle system that brings external data directly onto the blockchain. All of this is planned for the period from 2026 to 2027. If Kaspa delivers on these topics, it would be one of the few proof-of-work blockchains with full smart contract functionality and extreme speed. The risk, however, is that the team is small and the funding is entirely based on community donations. Bigger visions also require bigger resources, of course. But there is one factor that speaks in favor of Kaspa in the long term, and that is scarcity, deflationary model and maximum supply. Kaspa has a hard cap of 28.7 billion coins. There will never be more than that, and emissions always follow a unique model based on a chromatic scale. That may sound unusual at first, but at its core, it means that the reward for miners decreases by a fixed factor every month. Within a year, the reward is halved, but not suddenly like with Bitcoin, rather smoothly and predictably. This makes inflation with Kaspa extremely predictable. Since over 95% of all coins have already been mined, the selling pressure from new coins is naturally minimal. Structurally, it is one of the strongest positions in the entire altcoin market. Now let's take a look at whether the current price is even reasonable in relation to the overall valuation. FDV in relation to the total market capitalization. FDV stands for fully diluted market capitalization and is the theoretical total value if all coins that will ever exist are calculated at today's price. For many altcoins, the FDV is 5, 10, or even 20 times higher than the current market cap. This means that huge amounts of coins are still coming onto the market, which can of course put pressure on the price. With Kaspa, the ratio is about 1.05 to 1. The FDV is around 1.05 billion and the market cap is about 1 billion. This is one of the best ratios in the entire crypto market. There is practically no hidden dilution effect. What you see is what you get. But now the question is, what about liquidity? Is Kaspa even easy to trade? The trading volume in relation to the market cap. The daily trading volume for Kaspa is between 17 and 32 million US dollars. With a market cap, as I said, of about 1 billion, this results in a ratio of approximately 0.017 to 0.032. I see the minimum value for healthy liquidity at about 0.01, so Kaspa is clearly above that. This means you can buy and sell Kaspa, and the price won't be massively affected. For a mid-cap, that's a solid result. However, of course, there are projects with significantly higher volumes, other projects relative to market cap. However, if Kaspa were to be listed on Binance or Coinbase, the volume would of course multiply. Now let's take a look at how fairly the coins were actually distributed, the token distribution and the lockup periods. And here Kaspa has one of its biggest advantages. As mentioned, there was no presale, no bonuses or anything like that, no premine. There really weren't any coins distributed in advance to teams or investors. Every single Kaspa coin was earned through mining, and that's extremely rare in the crypto world. Most projects allocate parts of their supply directly to venture capital firms, advisors, or the team itself. There are also no vesting lockup plans because there were no coins distributed in advance. That would need to be unlocked later. The only central wallet belongs to the DeFi community, the DeFi hub managed by 4 elected individuals, managed with a multi-chain signature. All expenditures are publicly documented, however. This is one of the fairest distributions I have ever seen in an altcoin. But who actually holds the most coins? The concentration of top coin holders. According to on-chain data, the top 10 wallets hold about 16.7% of all Kaspa coins in circulation. The top 100 hold about 35% and the top 1000 hold 57%. However, it's important to note that the large wallets also belong, for example, to crypto exchanges or mining pools. This means that it's not individual whales behind them, but ultimately thousands of users. And in total, there are over 500,000 addresses that hold at least one Kaspa. For a proof-of-work project of this size, that's a healthy distribution. Manipulation risks are not that high and are rather moderate. But what exactly can Kaspa actually do now, meaning the Kas coin? Usage and use cases. Currently, Kas is mainly used as a means of payment for transaction fees. Miners receive Kas as a reward for securing the network. Since the KRC20 standard, it's been possible to create your own tokens on Kaspa, similar to ERC20 on Ethereum. The Layer 2 Kasplex already enables the first decentralized applications. But as mentioned, the big leap will only come in May of this year with the major upgrade. Then, smart contracts, programmable transactions, and native token creation will be possible directly on Layer 1. This would turn Kaspa from a pure payment chain into a fully fledged platform for DeFi, NFTs, and decentralized applications. Currently, Kaspa's utility is still limited compared to Ethereum and Solana, but the potential is clearly visible. And it's precisely this potential that also drives the community. The Kaspa community is one of the most active grassroots communities in the entire crypto market. Over 500,000 followers on Twitter, on Telegram, around 55,000 members on Discord, and over 500,000 holders on the blockchain. The developers are contributing on GitHub, and these contributions have increased by about 50% in recent months. There is an ambassador program, community events, and an actively maintained developer documentation. What stands out is that the community is extremely convinced, but in fact the engagement rate on Twitter is actually rather below average. That means there are many followers but little interaction. This is an area where the project still needs to improve. Nevertheless, the foundation is solid and growing organically. And that brings us directly to the last key figure, the upcoming events. Upcoming important events. Now we come to the most exciting part. On the 5th, May 2026, so this year, the biggest hard fork in history will take place. It will bring smart contracts and native tokens. Zero-knowledge verification on Kaspa, by far the most important catalysts for the project. By the middle of this year, around 95% of all coins will have been mined, B. That is of course extreme. And in the period from 2026 to 2027, the Deck Knight protocol and the ZK bridges are planned. And then there's the elephant in the room? Kaspa is on neither Binance nor Coinbase. If either of these listings happens, it would be a huge catalyst for the price and volume. In addition, there's the Kaspa Industrial Initiative. Enterprise adoption is set to move forward. So there are a lot of possibilities that could really drive a bull run for Kaspa in the coming years. With that, you now have an overview of the 20 key metrics. You know how strong Kaspa is, but also where the risks lie. But what does the overall picture look like when you add up all 20 key metrics? And how does Kaspa actually compare to other altcoins that I have analyzed? That's exactly what we're going to clarify now. So, you've now seen the complete analysis. 20 key metrics, hard data, no speculation. Let's get to the big question. Can Kaspa really overtake Bitcoin? And the honest answer is, in certain areas it already does. As I said, 10 blocks per second instead of 1 block every 10 minutes. Confirmation in under 10 seconds instead of 10 minutes. 95% of all coins have already been mined. Fair launch. No premine, no presale, no VC distribution. Technically, Kaspa has solved exactly the problems that Bitcoin hasn't been able to solve for almost 15 years. But, and this is also part of the truth, Bitcoin has something that Kaspa doesn't have yet. A huge ecosystem, institutional acceptance, and a success story spanning over 15 years. Kaspa is just at the beginning when it comes to these points. On my 10 times ranking list, Kaspa scores 86.3%. That's second place on the list. I calculated this result using my 10x formula and weighted it differently across 20 different metrics. I'll display the result transparently for you here now. This is a really strong result. And as I said, this is one of the highest ratings I've ever given here. And it's all simple, purely data-based. Kaspa scores particularly well when it comes to token distribution. In terms of circulating supply, in terms of FDV, all the fundamental data is extremely strong. But now the question is, what does the current chart look like? Would I get into Kaspa right now, or when would be a good entry point? We'll look at all of that together now in the complete chart analysis. Alright, let's jump straight into the analysis of Kaspa on TradingView with my 10x indicator. What does it look like? How do I calculate everything? The whole thing is calculated mathematically based on the market cap, or rather, the FDV, and in connection with the percentage share that the altcoin could have in the overall market if the overall market grows. But what does the bear market low look like now? That is mathematically calculated at 0.014. That would be roughly 382 million market cap. Just to put that into perspective. From now, that would be about minus 57%, which would also be an all-time low. Then the normal scenario is at 0.09, market cap of 4.1 billion. So it's definitely realistic that this could be reached purely mathematically in terms of market capitalization. From now, that would be about 177%. But now let's take a look at how things look with the optimistic. Let's look at the optimistic scenario. That would be the bullish scenario, of course, and significantly higher. That would be at 0.8. That would be, by the way, 21 billion. Just for comparison, Ethereum currently has a market cap of 277 billion. So again, it's not that unrealistic if Kaspa could really capture massive shares of the entire market. That would be from now roughly 25 times. That would be the bull scenario. Now, Vision 2030. If Kaspa really gains massive adoption in the end, that would be $3.5 US. That would be a market cap of 95 billion. If you compare that again, Ethereum currently has 277 billion. So, mathematically speaking, that's not so unrealistic. Let's take a look at what that would look like right now. That's always a bit tricky on this chart. Roughly, we're at about 3.2. So that would be about a staggering 10,000%. That would really be a truly monumental and significant increase if we are being completely honest about it. But now let's move on to the current situation. What does it look like right now? Kaspa recently had a big red dot here. That means we were overbought here. A lot of people bought here. Overbought zone. The indicator formed a big red dot. After that, we were also sold off massively. That was roughly it, 27%. Here we had another slight increase. But now, a small red dot. There we see another bearish trend reversal and we're heading down. So at the moment, it really does look like we're already in a risky zone here. You really have to be careful right now. Personally, I'm waiting until we eventually form a big green dot again. And then I'll continue analyzing the chart. That's the point for me where I might consider something further. But at the moment, as I said, I would be very cautious with Kaspa, and also because of the entire market, since everything has risen massively. Personally, I expect a bigger correction soon. If you want to use the 10x indicator for your own analysis, you'll find all the information in the video description. If you now understand why Kaspa is really so technically strong and what sets Kaspa apart from other altcoins, then you should definitely watch this next video. There, I'll also show you another altcoin that performed very well on my 10x ranking list and is technically exciting. Take a look at Internet Computer. Extremely exciting. Thanks for watching and see you in a moment.